What's poppin', guys? It's your boy XO, and in this video I will show you guys how to create a professional profitable trading plan. And not just a professional trading plan, but a trading plan that has been proven to work and has been used by most professional traders. I mean traders that trade with the bank, hedge fund managers, and retail professional traders that are extremely profitable. Alright, so stay to the end of this video to find out every little nugget that I'll be sharing in this video, so you don't go missing out on this gold mine. And this is the whole premise of trading in the forex market. If you can create a professional trading plan, you will go from being a losing trader to a profitable trader, guys. You will go from being a beginner into being a professional. Most times the trading, the technical analysis, price action, the indicators don't really matter that much if you do not have a trading plan. Alright, so let's get into this video. And also, only a small percentage of people watch my videos are actually subscribed. So if you end up liking this video, please make sure to subscribe and hit the bell icon. It's free. You can always unsubscribe. Like and share this video to help this video rank in the YouTube algorithm so more people can find this video. And if you have any questions or have any video ideas, then drop a comment. Enjoy the video. Okay guys, how to create a profitable trading plan like the pros, guys. So this will be 7 key factors to developing a strong alien trading plan. All right, that's what I call it, guys, an alien trading plan. Quick in-depth video to help you develop a professional trading plan to help you become profitable traders. Okay, number 1 is the time frame, guys. So you have to choose and pick a time frame that suits your personality, guys. So pick a time frame that resonates with you and fits your personality, because I can love scalping and the next guy loves day trading and the next guy loves swing trading. All right, so we have to pick what's best suits us. Personally, I like day trading, like trading on the 15 minutes and on the 1 hour. But I have some strategies that I actually use in scalping. So guys, you can be a trader that also have a full-time job. So basically, you can't scalp and you can't, I don't know if you can day trade, but at least you'll be looking towards the day trading and swing trading. Right? So if you have a full-time job and you want to look into trading in the forex and stock markets, you can do it from the day trading, the swing trading, and the position trading.
A few moments later.
So guys, for scalping, you're looking to trade on the 1 minute to the 5 minute time frame. For the day trading, you're looking to trade on the 15 minutes to the 1 hour time frame. For the swing trading, you're looking to trade on the 4 hours to the daily time frame. And for position traders that trade for a very, very long time, I mean like months, right? For months, you're looking to trade on the daily and weekly time frame. Scalpers, day traders, they trade and close their position in that same day. Swing traders probably take their trade for maybe up to a week, but position traders, guys, have their trades open for like months and even sometimes years to come. Okay guys, for the next section will be risk management, guys. So don't risk more than you can afford to lose. Don't risk more than you can handle, guys. Don't take a trade that when you take it and you want to sleep, I mean, you won't even be able to sleep, because you guys understand what I'm talking about. Like that guy that risked 40% of his entire account size on one single trade. Well, if I do that, then I most likely won't sleep. So what I'm trying to say, guys, is you have to risk 1 to 3% of your capital size per trade. Well, like I said, it all depends on what kind of trader you are. If you're a scalper, then you're looking to take maybe 1% of your account size, or even less sometimes. And if you're a day trader and swing trader, then maybe 1 to 3% is good. But for position size traders, I don't think 1 to 3% is a good idea. But man, just do what you gotta do. Like for my own position size trading, I risk like 10% of my account size. But that's me, guys. That is me. So, but based on the culture in forex trading and risk management culture, it's been recommended that you risk 1 to 3% of the capital size per trade. So guys, note the key to becoming a successful trader is having a stable risk percentage per trade and sticking to it for a long time to allow it to play out. So not like you go risking 1% today, the next day you're risking 3%, the next day you're risking 5%, the next day you're risking 0.5. Guys, you need to stay consistent with the amount of money you risk per trade. So real quick, guys, number 3 is trading confluences. What do you need to see in the market to trigger you to buy or sell? How many confluences do you need to see to enter a trade? That is a question you need to be asking yourself. Do you need to see okay, let's use this for example. Do you need to see a divergence and a retest of the previous market highs and maybe price above the 200 EMA line confluences. Like you're adding multiple reasons into one to create a trading bias. All right, so like some people trade, okay, when I see a break and retest of structure and I see the price above the 200 EMA and I see a cross in the MACD, then I'm looking to take a trade. That is, of course, that's confluences. You're adding 3 confluences into one trade instead of just taking trades based on MACD cross, which is not a good idea. We're now adding it to break and retest above 200 EMA, making it a good trigger for you to buy or sell in the market. So guys, number 4 is going to be the market condition. Guys, the market condition. Do you wait to see the market in a certain condition before you buy or sell? So do you wait to see the market in a certain condition before you buy or sell? What am I trying to say, guys? What I'm trying to say is the market is always in one of these 2 phases. The market is either in a range or in a trend. It's either ranging or trending. This screenshot is like, you can clearly see that the market is in a trend. So you're looking for the market to be in a trend or ranging. Like at this point, you see the market is actually ranging. Are you going to take a trade only when the market is ranging, or will you take a trade when the market is in a trend? Like you can see a break and retest above the 200 EMA. This is like kind of the confluences. And Fibonacci retracement tool is used for my entry on this trade. So guys, you can go watch the Fibonacci retracement tool video, and I will leave a link to the playlist where you can go and watch every single video that's going to help you out. Help you out a lot. You guys need to go watch this playlist. Click the card on this video, like above here, I don't know, above this point here, and go check out those playlists after you're done watching this video. Your entries, guys. Do you wait for a certain market behavior before you open a position? You can actually be a trader that opens a position only when the market does one of the following. You can either be a trader that enters the market when the market is in the pullback phase, a breakout phase, or in a crossover phase. Like you can see, there's something called a break and retest. All right, so a break and retest is what you basically call a pullback, because the market is going up and breaking the previous high, and retest, which is a pullback. Like when the market goes up like this, comes back down and retests. There's something called a breakout. For example, you can see this candlestick broke out from this trend line, which is this box. You're gonna be a trader that actually trades when the market breaks out and you open your trade, or you trade when the market cross over, like this MACD cross, or the 200 EMA and the 50 EMA cross, or like I said, a pullback when the market pulls back and it comes back. Like you can see this pullback at this point, and you get in on the trade for a buy or sell, I don't know. So you can be a trader that takes one of the following: a pullback, a breakout, a crossover. I hope I'm not too fast on this video. I just want to make this video real quick and pass as much in-depth knowledge as I can possibly pass to you guys. So number 6 is going to be your stops. This is probably one of the most important aspects of your trading plan. Like if you can get this figured out, then you're gonna be, at least you have an edge over most traders in this industry, guys. So do you place your stops away from market structure, or do you use the ATR indicator? Guys, personally, I'm not gonna lie, I use the ATR indicator in all my trading strategies. Like if you watch my videos on YouTube, you see that every strategy video I've done, or the live scalping or the live trades, I always use the ATR as my stop, because it takes into consideration the volatility of the market and gives you the value, so you can use that to determine, okay, how big of a stop. I use the 1.5 or the 2x ATR value in my trades. So most traders I've seen use either one of the following: market structure. Oh sorry guys, I misspelled this, I'm so sorry. I meant market structure or ATR. Personally, I love to use the ATR value, like I said, for my stops, because I get to use the market volatility as my stop. So I hope you guys understood that. So let's go to the number 7, which is the last part of this trading plan. So guys, number 7 is your target or your take profits. So do you place your profit targets and take profits at fixed level, or do you trail your stops? Most traders I've seen use either one of the following: fixed targets or trailing stops. Personally, I love to use both for different strategies I have. So guys, I am a trader that I don't have a bias. I either have a fixed profit target or I trail my stops. I have like a bunch of strategies I use in trading, but I have like 3 main strategies, and these 3 main strategies actually consist of me trailing my stops or having a fixed stop. So there's no right or wrong for this as long as you have your stops figured out. So you have to decide on which stops you're going to be using. Are you going to be using an ATR? Like I said, will you be using the ATR or the market structure? You need to figure this out because you don't want to go using the market structure on this entry and on the next entry using the ATR value. Guys, you need to be consistent, right? One main thing about the trading plan and how to make it even profitable. So one thing about the trading plan is you have to be consistent. Don't go using a pullback and the next entry using a breakout and the next using a crossover. You have to be consistent. Don't go using a market structure on this entry and when the entry shows up again using the ATR value. You need to be consistent. Okay guys, I keep forgetting this guys. If you want to trade with me live every single day on Telegram, click the link in the description guys to join my free VIP Telegram group. It's free of charge guys. You can go down in the description of this video, click the link, it's the first link in my description, and join my Telegram group. It's free and you can always join or unsubscribe. I don't know what to say. So if you guys found value in this video, I want you guys to please like this video, share this video with your friends, leave a comment, and most especially guys, subscribe for more content. Turn on the bell icon because that will make me happy and make you happy. Of course, it should make us happy. So I'll see you guys in my next video. I hope you guys have a great and wonderful day. Stay XO.